Welcome to another Straight Up Tuesday tip. I'm 𝗤𝘃𝗃𝗀𝘁. With me as always is 𝗬𝘃𝗶𝗵𝘁. And back with us again from the Build Your Team page, Mike Procaccio. And for those who don't know, go back to episode 198. He talks in greater detail on a lot of different things around your tax strategy that investors need to know. But today, Mike, welcome back. We are going to be talking about tax credits for solar panels and electric vehicles, which is something I know nothing about. So I'm going to hand the reins over to you, man. Let's start with solar panels. What do we got there?
Well, first of all, nice to be back. Thanks you guys for having me on. So for solar panels, they're getting much more popular nowadays. You can drive down the street and see a lot of your neighbors have the solar panels. So the credit for that, it's going to be 30% of the total cost of the solar panel system. So say, for instance, you spend $60,000 on a system, which is not out of whack. I mean, we've seen people spend $70,000, $80,000 on these things. So say for a $60,000 system, you're going to get an $18,000 credit. And that's for your primary home. So no rentals for that. And with the solar panel, it's fortunate because there's no income limit. So you can make, $1 million on your W-2 and you can still throw in a decent solar panel system and get the credit. What that does is it reduces your total tax, but you can't reduce it below zero. And if you do reduce it to zero, it gets carried over to next year. So it's a pretty favorable credit.
Will it favor, what about house hacking? I know you said owner occupied only, but if you live in a unit in a 2-flat, can you get that credit?
I'm sure you can work out because technically you are living in half of it. So you'd be able to write off the portion that was used for that.
Some people are financing these as well too. Are you able to write off that interest on those?
You can finance it, but if you lease it, you can't do it.
Okay. So if you're buying it outright.
Yeah. A lot of people, they lease them for whatever reason. I think you're just replacing your electric bill at that point. But, I think if you are buying it and financing it, you are eligible for the credit.
Got it. And so just to be clear, like you get this is credit against the income you've earned, right? So if you get a $20,000 credit and it's almost like offsetting, depending on your tax bracket, $75K of income or whatever, right? The taxes you would have paid on that. Is that correct?
It's reducing your total tax. So on page 2 of your tax return,
got it.
Total tax number, say you had $40,000, it reduces that by, the $18,000. So any withholding that you had, say you were going to break even that year, you just got a decent refund, so it really helps out in that regard.
Got it. Yeah, so it's a pretty big chunk there. All right. And this is owner occupied only though, right? Like, so correct. I own a 10-unit building. I get solar. Is there anything for me there or no?
Not right now. I mean, I've done a lot of research on it and as of right now, there's no rentals. I mean, people are trying to get in there with like second homes and stuff, but as of right now, it seems like it's only for primary homes. That may change, hopefully.
Is there a way someone can use, so someone has a short-term rental in Northwest or Southwest Michigan, and they're using it part-time. Are they able to call that a second home?
That's a little dicey especially with if you've already done it on like your main home, that's where it gets a little gray in that area. I probably wouldn't do it. I would advise my client to not do that, but I would just do it basically in your primary home, and then you're gonna be able to get the credit to the best of its ability.
Gotcha.
I want to go back to one thing Mark mentioned. So you can finance this, right? So let's say you paid $60,000. It's almost like a car payment, right? You can do something down, pay X amount a month, but you would still collect all that tax credit would still hit year one, right? Even if you haven't paid all the tax credit and you're leveraging the financing on it.
Yep.
Okay.
Yeah.
Got arbitrage there.
Yeah.
Yeah. But I mean, you are paying a decent chunk though, because these systems could be pricey. And there's a lot of stuff with the state as well, because every state is different and every electric company is different. So you also have to talk to your tax advisor in your specific state with your tax, with the, whatever the ComEd is where you're from, and see what credits they give you, because those may have to be reduced. They might have to reduce the total system cost. So there's different stuff you have to worry about with that as well.
So there's additional opportunities. Are you saying there's additional opportunities with ComEd on top of that? Or
I'm not 100% sure with ComEd, but I know some electric companies, they will give you like a credit for doing it. And I know some states will give you a credit for doing it. And how that works with the Fed, it's, unique with different situations. So that's definitely something you have to talk to people about, your tax advisor about.
Okay. So nuanced question here in Illinois. Like we're talking about, everything we're talking about is at a federal level. Anything else that investors need to know here in Illinois that's worth mentioning?
For the solar panel, there's really, for investors, not much. You can't do it on rentals. For your primary home, it's pretty cut and dry. you got to talk to ComEd and see what they're doing, because that stuff is also changing once they hit like certain levels. So it's constantly changing with that. It's similar to like the EVs when like they sell a certain amount of cars. So you just got to be, just know all the information before you get into it, because those guys can be pretty good salesmen.
All right, segue into EVs. I know there's some laws coming out January 1st, and new construction now in Chicago is requiring certain electric upgrades that wasn't here a couple years ago. Talk to us more about that side of things.
So for the EV, the electric vehicle, a lot of those are becoming much more popular now. So what you get is you get a credit for $7,500 for a new EV. And you can get, now they put in place in 23, $4,000 credit for a used EV, or 30% of the vehicle cost, whichever is lower. There are some stipulations though. The SUV, van, or pickup has to be less than $80,000 for MSRP. And it phases out between $80,000 and $100,000. And if your car is over, or $80,000 and $100,000, if it's over $100,000, the credit goes away. And for sedans, it's $55,000 the cap for sedans, and it phases out at $75,000. That was put in place to make sure that EVs continue to be affordable and just kind of limit that. So that's good. There is an income limit on this, unlike the solar panel. So if you're married and make over $300,000, you're not able to take the credit. And if you're single and make over $150,000, you can't take the credit. And what's unique for 2024 is now the credit can be taken at the dealership instead of on your tax return. So there's going to be a reconciliation process. I haven't come out with the exact details of that as of yet, but I would assume there's going to be a reconciliation process where you get something from the dealership, you put it on your tax return to make sure you're eligible and all that. So it'll make life a little easier for everyone in that regard. And it's similar with the credit with the solar panel, where you can't go below zero on your total tax. And if you do, it gets carried over to the next year and it reduces your total tax.
I love it. All the different parts of government that drive us crazy, that are slow to change and all that stuff. The IRS actually says, all right, let's go do this, and we'll figure out the forms in the beginning of next year. Like they do that to a point, which is actually a little entrepreneurial of them. So it's one glimpse of democracy that's pretty good.
Yeah, they've changed forms mid-tax season before.
Yeah. Like they do shit on the fly, man. That's very like entrepreneurial. I love it. Tom is smiling.
You're just saying that because it's tax season. You don't want to get audited. I have recorded saying I love you guys. All right, so this almost reminds me. Do you remember when the auto industry was in trouble? This is going back to the 08-09 crisis. Wasn't there like it was a similar credit, right? It was like $7,500 at the dealership. Like it was a big number.
Cash for clunkers, dude.
Yeah, cash for clunkers. Yeah, it was a trade-in one. That's what it was. All right, so we have income limitation.
Yep.
We have limitation on the price of the vehicle. And you're saying now, just to summarize this, you walk into the deal, you don't have to wait to do your taxes to get this credit. You're just getting it's almost like a down payment, part of your down payment.
In 2024, yeah. I'm not sure how if that's gonna be credited to your down payment or what. I think that's up to the dealership. But a lot of these car companies, like I looked up, in preparation for this, I looked up what a Tesla Model X costs, and it's $79,900. So that's the MSRP. So they're kind of in tune to what's going on here. And I would assume, I'm not sure that this is actually happening, but I would strongly assume that you're going to be able to buy an SUV for under $80,000 and have, after you purchase it, add on the accessories later. I would just assume that that's going to happen. So you're still
to keep it under
credit,
yep.
But you're putting all the accessories that you want on there after the fact, because that doesn't count towards it.
Yeah, or like two separate contracts, right? Like
it's like new construction. Speaking of new construction, is there anything around tax credits for those upgrades that have to be now made on the construction side?
I'm not sure. I haven't looked into that as of right now, but I could look into that and get back to you on that one.
All right, maybe I have to get some updates here.
Yeah,
and I guess I'll do a quick plug here, non-tax related. But if you have a building that's 3 units or more, you can call up like at Drexel. We've used Franklin Energy. They'll come out and do the assessment. And then if you need to get pipes wrapped, or you need to replace appliances, or they'll do light bulbs for you, or the shower head, like it's all either free or heavily discounted. So you get a free assessment, and then they say, by the way, if you make these energy upgrades, like, some of the smaller stuff's free. Like we'll just go do it. Like here's outlet, all the little stuff. And then on the bigger stuff, like the fridges, you'll get, 40% discount or whatever. It's a huge rebate going through the program. A little bit of red tape to go through, but it's definitely out there. So feel free to contact us on the webpage. We can get you in contact with the right people. Not tax related, but it's along the same lines here of just using the credits that are available to you.
The same, I think ComEd and NICOR, for those of you listening in Illinois, also do something similar for your primary home too. They'll come out and they can give you like the tape to put on your windows or like the sealant for your like the doors and stuff. So they check that out too.
Yeah, man. Find every nickel we can here.
Yeah.
So, Mike, as we're wrapping, so all good information as we're wrapping up. What just timing wise, this question's come up a lot. When's a good time to meet with your tax advisor? Right, like and I know the answer is not supposed to be October 14th for those of us who extend to October 15th, but what's like a reasonable timeline for, as people continue to grow and scale and their finances get a little more complex?
I think there's always, like, if you have a question, always check with your tax advisor, send them an email, give them a quick call. But there's a few different scenarios where you should definitely set up a meeting and get some time on the calendar with your accountant. If you got married or divorced, that's going to change your filing status. It's going to change your income. It could potentially change your tax bracket. So you got to check that out. If you sell a big chunk of stock, or another asset, you got to review capital gains. You can only deduct up to $3,000 per year. If you bought or sold a rental, especially if you sold one, you got the depreciation recapture. And if you made a profit, you have to see how that's going to affect your taxes, because that can throw you a big curveball that a lot of people are not ready for.
You should be having that conversation before you sell. Sometimes, like, should I sell?
They get surprised, and like we send
the capital gains and the depreciation recapture. You put that together, it's like, oh crap.
Yeah, that's a kick to the gut sometimes. And if you purchased a rental, you gotta see, is it a good time now to do cost seg? Do you qualify now for real estate professional status? Can you get those hours up? If you started a business, or if you sold a business, again, you got depreciation recapture. If you made a profit on selling. If you started a business, you need to review the entity for tax purposes to make sure you're set up correctly. A lot of people do this after the fact. That's something you should be done before. You need to review payroll. Did you pay yourself? Should you pay yourself? Is payroll set up correctly? Another one is moving out of state. If you're a resident, and if you're W-2, make sense of it. And for those people with more complex tax situations with like rentals and businesses, you should be meeting a minimum once or twice a year with your tax advisor, just to kind of review the big picture and strategize, about how you're going to do things. Is it a good time now to purchase that HVAC unit? Is it a good time now to buy or sell that thing? Just to see, because that way it's not when you're filing taxes, because when you're filing taxes, there's not much you can do. You have to do all the strategizing during the tax year, because that's when you get the most bang for your buck. You should also check your withholding versus your total tax with all this stuff to make sure that you're not out of whack. And another thing we see more often than we should is Illinois on your paycheck not getting withheld at 5%. So we see it at 3%, 4%, which could throw you for a bit of a spin. If you get your Illinois and you're expecting a refund, you actually owe a couple thousand. And those are some things you should meet your tax advisor with.
Awesome.
Yeah.
Great advice. Mark, are we ready for the Chicago Fact?
Ready for the Chicago Fact?
All right. Sponsor today, an obvious one.
Yes. Sponsor today is Michael Procaccio from Pro Financial Services Group. So we're playing for Gwen Goldling out of Park Ridge. So Gwen, if myself or Mike gets this question right, you get a $50 gift card brought to you by Pro Financial Services Group.
All right, let's help a Northwest Sider here. So this is, I thought this would be relevant because you guys are both in Roselle, right behind the train there. And we're talking about taxes, so I figured bribery is probably a decent subject to bring up here. We haven't had a bribery question in a while. So Roselle Hugh, for whom the town is named after, was also the president of the Chicago and Pacific Railroad. In the 1850s, he saw the linen mills of Roselle would grow substantially if the train tracks went through there in Medina as opposed to Addison. So it is rumored he paid how much to get the survey changed to run the rail line through Roselle? So how much in 1850 did it take to bribe officials to get the train line to run through your city is the question. And the options are $950, $10,000, $85,000, $170,000.
Oh man, I just had, what year was this again?
1850s.
Oh, I'm gonna say $950.
All right. An option for like a goat or a horse or something?
No, there's no goat or horse.
I'm gonna have to agree. I mean, 950 is a decent chunk back in eight. What's below 950?
950 is the lowest.
Oh, 950 then.
What's the next one up? You gotta go up the next one, so we give Gwen the best chance.
What's the next one up?
10,000.
Yeah, 10,000, I guess.
See, Mark understands the game and the strategy. It was 10 G's.
Really?
That's crazy.
We're talking about redirecting a train line. This isn't like zoning from R4 to R5, guys. This is a big deal.
Yeah, that's that. I mean, 2,000 in 1850 is a lot of money.
Wow. And I can see how, if you look at the map, how Addison got screwed, dude. So
yeah, sorry for that, Mark.
Which probably means Bloomingdale got screwed too. Like Addison,
Bloomingdale and Addison got screwed. Itasca, Medina, and Roselle were the winners.
All those, man, that's crazy. All right, man. That's
the guy pulled the bribe off and gets the town named after him.
Yeah, that's a win.
Back to entrepreneurship. I love it.
Yeah, it's just a very good Chicago question there.
All right, Mike. Awesome. Thanks for coming on, dude. You helped. You give us a lot of good information today. Tom, thank you as always. Listeners, you can check out Mike and the rest of the Build Your Team at straightupchicagoinvestor.com. We have Mike on there who's if you're looking, right now this should air right around November, December. If you're getting ready for next tax season or you had one of those life changes, check Mike out on there. You can get his direct information, or you can go back to episode 198 to listen to a full episode we did with Mike last year. So Mike, thank you. Tom, thank you as always. Listeners, we'll see you next week.
Thank you, guys.
Thanks all.